Well, thank you so much. Okay. Well, thank you so much, Brenda, for that great introduction. Yes, I am Maria Griffiths, and I work for Truist Bank, and I'm actually joining right now with some of my wonderful peers and partners. So I have with me Matt Freeman. He's actually our market president for North Texas, and I do have with me Miss Lydia Tate, and she's actually our commercial banker as well. I have with me my partner for multicultural banker, Miss Kay Chambers, and I do have one of our branch leaders with us, Connie Alvarez. So they're actually part of our team, and we're here together to help with any information regarding to credit and make sure that we can provide the best services as the community needs right now. So I'm going to share my screen with everybody. And hopefully if everybody can see, if you have any questions, feel free to let me know. I'm here to support you in any way. So don't feel like this is a class that you cannot raise your hand or send a comment. And all of us will be able to make sure that we support you. So our program basically is going to be talking about your success. And so Truist have developed this program with intention to partner with organizations like Jewish Family Services to make sure that we can definitely make a difference in our community. Our real, truly purpose is to make a difference, inspire in the community. So today we're going to be talking a little bit about information about why are we doing this for the community. Inspire and build better lives and communities is our purpose. And we're gonna make sure that you guys take these to your homes and your family and just help each other, because this is what we can do together. One of our main things today will be building credit and basically understanding how we're going to be doing this. So this class is going to be focusing a lot on those basic information. Credit is something that is definitely something complex if we had never really taken advantage of the experience that we had before. But today we're going to be able to answer questions and share a little bit of information of how to build it and how to maintain it and repair it. One of the things that I want to address first is determine your financial situation. If we're going to talk about credit, we need to start by doing what is really the basics of this. What you spend your money on, how much money you earn each month, how much disposable income you have, and your financial priorities. It's basically one of the problems that we don't actually address to setting our goals. So the main purpose of talking about credit today, we're going to be going to the basics. And so determine your financial situation is something that I wanted to address for all of you. The main thing that I wanted to address as well before we touch into credit will be actually setting SMART goals. We have on purpose that setting SMART goals actually means to make goals specific, measurable, attainable, relevant, and time-bound. If we don't actually have a mindset of what our goals are, we're never going to be able to really go into the credit mode. Create short-term or long-term financial goals. Short-term goals are setting to a 6 to 12 months. And then the long-term goals will be actually applying toward any year from now or less than 10 years. We have to be able to measure them. We have to be able to track them. And in that case, we actually will feel the success. Our program, that when we talk about anything on Bank on Your Success, we're trying to encourage people to not feel any type of anxiety towards money, any type of anxiety towards finances. This is a subject that many of us may have faced at one point, that we feel the struggle. We want to make sure that with this program and these tools, you feel stronger every day. And 2023 is not going to be a year where we stress about finances. We start working a little bit towards feeling better. So our well-being will be perfect. What is actually a credit score? And so many of us probably question, well, I have a great credit score. Do I have 700? Do I have 800? Do I have 400? Right? The biggest factor that impact your score are payment history and amounts owed. Credit scores can increase over time with responsible credit usage. Many of us, when we're 18 years old, graduate from high school, we thought that the sky's the limit, but we have 0 credit score. We were babies in the eyes of the credit and the lenders. So surprisingly, we go to buy a vehicle and we get declined. So we go back to our parents' house and be like, I need to buy a car. Can you help me? So you have to co-sign with someone. Things like that happen because credit builds baby steps. You kind of become an adult, but really the credit starts just being born at that time. So there is tools and ways to kind of start building it when you're younger. And we're going to talk about that in a little bit. So credit scores are over 600 are considered good. And we're talking about under 650, 670 are considered fair or poor. We can go into ranges. I have seen ranges on the 350s. I didn't even know that actually possibly exist, but they're actually existing. And there is actually a zero. I saw one time a zero credit score. I was surprised, but it actually exists. So even though zero might not be, it is the lowest number possible, it might not actually be totally dramatically bad. That means that that person just simply never had it. I have seen 18-year-olds with credit score really poor because they have made wrong choices. So, and I have seen an 83-year-old man who had never had credit in his life. His wife was handling all the credit in the house, and he bought his home cash back in the 50s. So we have information that we see that credit can fluctuate dramatically, but we're more than numbers. And we're going to learn that today. We're not striving just for a number. We're striving for really solid credit and really how to make sure that we can maintain it. I want to ask one of my peers if there's anything that maybe they want to share on that part about the credit.
Yeah, I know. I appreciate it, Maria. I do think it's important that, the number may seem like a scoreboard, and that is a factor that financial institutions or lenders or, whether you're looking to rent or buy, that it is something they look at, but it is important to know that there are other factors that go into that. Also, there's a lot of different variables that go into that score that I know Maria is going to touch on later. So it's almost like I equate it to, your credit score is a game, but I'd say 75% of Americans don't know how you keep score in the game. So this is going to be really helpful in the sense of there's kind of tips and tricks of what goes into that credit score that isn't broadly accessible, that knowing it and Maria giving you this power is going to make that impact there. So I think you're off to a great start. So I appreciate it.
Thank you, Matt. And Matt is actually part of our commercial part of the bank. So he actually can see that impact on how they change, because in consumer lending versus commercial lending, it's a whole different factors that we take in consideration. So we're going to talk about these differentiation, because sometimes we say, well, I'm great on my personal side, but my business have really not credit. Well, we need to find ways to connect both of them. So we're going to talk about a little bit about why credit is actually important, why these scores are important. So lenders use credit information to determine whether to lend money to you. Obtaining credit can be difficult if you have never had credit or had issues in the past. So one of the things that I want to share with you about this is because we have the tendency of saying, I want to build credit by applying credit. But sometimes if you're applying for something with no records, it's like applying for a job to being a chef and you had never cooked in your life. There's no records of that information. So you're kind of promoting yourself of like, hey, I'm a valuable chef. I know how to do this, but I can't cook a meal. So it's very controversial because there is so many different factors, as Matt shared with us, that we take in place, and banks take in consideration so many different risk factors in order to lend you money. That's why there is programs in the lending side when you buy a home that you said, well, I cannot have a credit card, but I was able to buy a home. How does that happen, right? So there's different programs, different type of things that we are placed together, factors that are considered in order for doing lending. So you can always get a free copy of your credit report each year. This is actually a right that we all have. And so it's actually to the annualcreditreport.com, as well as your bank may be able to provide a copy of your credit report in updated basis. Check it out. If your bank provides that information to you as well, you should be able to access to this information. Why credit score is important? Of course, we share that in order for us to be able to get access to credit, okay, we dream to have access to cash for buying major things. Unfortunately, the way that we have been building our economy sometimes is just striving to just credit and forget about a little bit about what do I have in hand. What happens when your credit is not actually built right? I don't have access to cash or to credit. So then you struggle. And that's when the financial stress can occur. It's so important that we build credit, not because we need it, but just because we just have it. I always said it's always great to have credit and not need it, than need it and not have it, right? So credit is something that is a mandatory task in our culture. We live in the United States of America. We don't live in other countries where probably you can deal with cash and say, oh yeah, I'm okay. Credit in the United States is so important to rent an apartment. Credit is important for so many different reasons. I listened to a conference once that this individual said, you don't have to do credit, you save all the time. Yeah, it's true. He said, I can buy a whole commercial building, but I cannot actually borrow against because I don't have any credit. So we live in a society where we definitely have to have credit for just a reputational risk. If we're gonna rent an apartment, if we're gonna actually move out of our house and just get a cell phone, it's actually, they're going to pull your credit. And so your credit is your resume. It's your curriculum vitae. It's all your information showing your history payment. And this is actually a chart that I want you to take a look and see what actually are the influencers on this magic number that we saw earlier. A credit score is a 3-digit number used to represent the likely an individual will repay a debt over the time. Here are the elements that make up a credit score. So the biggest thing is your repayment history. So that 35%, if you see the chart right here, you have a 35%. The next part is the amount owed. Unfortunately, we have the idea that if I have a credit card for $1,000, it's my first credit card, I'm going to use the $1,000. Automatically, that $1,000, if you use it all, you're maxing out your capacity. Whether you pay it every month and you leave it again on zero and use it again, you're constantly showing that you are using the whole overall balance on the card. So using that, knowing these amounts as a differentiation, like a percentage amount, will definitely help you. So on a credit card for $1,000, you shouldn't go showing on your credit report that you're not using more than $300 overall. So in order to mark that 30%, if you keep it under 30, even better. I always suggest my clients, if you can pay before the credit, basically the statement cycle ends and they reflect your balance, it will definitely make an impact. I used to pay my credit card when I wanted to build my credit because I usually go a little bit crazy during the holidays. I make sure that I paid actually before my statement cycle ends. It's not the due date, it's a statement cycle. So in that case, actually the reflection will show lower and automatically I get and look good for everybody because I always compare it to a newspaper. Once that information goes reported to the credit bureaus, it's actually public. Everybody can see it. And you will get offers or declines based on that information. So your behavior on a month can be reflected and impact you very high. The other part is the 10% of types of credit used. We talked earlier, if you have a vehicle, if you have a credit card, if you actually have a mortgage, if you actually have several lines of credits. So 10% of that is the new credit. Anytime that you open a new credit score, a new impact, I call it actually it's like a Rocky Balboa punch. You get really hit for that. Depending on the impact, some of the new places that will tell you it's not gonna hit you. Just check your score. It's a soft inquiry. Those soft inquiries will still reflect on your credit, but it will not make a decision. I'm going to ask these to Matt and Lydia. I don't know if you guys can share a little bit.
Yeah.
When it comes to that.
Yeah, appreciate it. I think obviously a lot of really good information here. And when I said, not a lot of people know how we keep score when it comes to credit, I think this is a great take home because it shows you all of the different factors, that go into it. And I'll give a couple of personal examples here when it comes to that. So, when it talks about type of credit, obviously there's things like your utility bills and your debit card and your credit card that go into the types of credit. So the credit card and your bank accounts are one form, but then there's what we call installment loans, right? Which are your term loans, your car loans, and your mortgages. So there's the score that these financial institutions look at. And I remember when I was buying, my first car, I had a good credit score, so I thought I was going to get a great rate. But then they said, well, you've never had an installment loan before. So despite your score being high, you've only ever had credit cards. And despite paying all the bills on time, it hasn't showed that you've had kind of a larger payment like that. So similarly, you may be more favorable with your second house than your first house, or your second car versus your first car, because they want to see, not only do you have good payment history on some of those smaller ticket items, but what have you done for those installment loans? So you may get a bigger lift for paying your house or paying your car than you would be, for paying your credit card. So that's one personal story. Another one, when it comes to length of credit history, I'm a banker, and I, issue loans as part of my line of business, but I'm a very, risk and debt averse, guy. So when I got my job at the bank 12 years ago, I had a credit card with another financial institution. I was like, well, hey, I'm going to be loyal to my bank, so I'm going to get a new Truist credit card, which used to be BB&T. So I canceled my old one, thinking that I didn't want to have two of them out there because I really only needed to use one. When in theory, that 15%, when it comes to length of history, it would have been better for me to keep that credit card I got when I was 16, 17 years old, and maybe just locked it and not used it. So that way I had that history of 16, 17, 18, 19 to 22 years old until I got my other job at the bank. So that's not to say definitely not get as many credit cards as you can to keep the history. But if you've had a card or you had an account that has a long-term history there, it's best to leave it open, but then maybe you could just block the activity. You can call the credit card company and say, hey, I'm not going to be using this card. I'd like to leave it open, but please block the activity so that way fraud doesn't, potentially happen on it. And that would have positively impact your score because of that length of history. So, here's thinking one thing when it comes to type of credit. Hey, I've paid all my credit cards on time, and as agreed, I'm going to get a great car loan rate. But one of the things they looked at, like we talked about, was types of credit. Same thing when we talked about length of history. I thought I was being really conservative by, I don't want two credit cards, I'm fine with just one. But it was a small ding because I subtracted, 5-6 years of history on my first card. So, and I think Maria brought up a good point about soft hits versus hard hits. So if you're applying for a car loan, applying for a home loan, that is going to be, a hard inquiry because you are applying for credit. But I believe, and Maria, you can elaborate on this, if you were to go to one, say, dealership to apply for a car loan, and then maybe you were to go to a credit union or apply online or a financial institution, that's not going to hit you hard 5 times. There's a window of time where when you're applying, they look at the same credit score and the same report, but they're not going to ding you those 5 times. So that's just kind of another little tip and trick where, and these things ebb and flow over time. So you may get hit because you're applying, but once you get that loan and you start paying, it's actually going to have a more favorable impact.
Thank you, Matt. That was super helpful. And I love the fact that you related to your personal experience, because it's true. We all have faced that situation. I was.
Looks like we've got a question in the chat here.
Okay, I love that you guys can help me with monitoring the chat.
Yeah, please, y'all just chime in, chat, do the hand raise, unmute yourself, speak up. This is our conversation as a group, not just, our Truist team. So I'll read the question aloud, Maria, and I'll let you start, and then I'll go back. Is it good to have a lot of credit cards that are not used often versus having 1 or 2 cards? So I'll let you start, and then I can, elaborate.
Sure. So actually, and I'm going to share this with you thank you, Allison, for the question, by the way. So in reality, when we're talking about the length of the cards, it is what just Matt shared a couple minutes ago. So you have to know the value of this card. I'm going to give you a very specific example. If you have a credit card that is $200 that you opened 17 years ago, it might not be as impactful if you have a $5,000 card that you opened maybe 3 years ago. So the length and the amount, it really takes the difference. So you have to kind of evaluate what is really the worth to keep versus what really, because if I always tell my clients, so I was actually a lender, I was a home lending advisor before I do my role right now as a financial wellness. And prior to that, I was a business relationship manager in California. So I always tell my clients, if you tell me you have a secure card for $500, that is not as impactful if you tell me I have a $5,000 car that I opened 2 years ago. So should I keep the $500? No need. because you're trying to prove it's like a resume, what we talked about earlier. Your credit report is showing your history. It's showing kind of like your whole picture of what you do regarding cash and credit, how you manage it, how you pay. So if we're talking about a secure card, it's basically saying that you're keeping that, you have $500, but in reality, it's like the bank couldn't trust you at that point to give you one unsecured credit. So that secure card in reality at that point is not really doing anything. And on top of that, you have $500 just waiting for you. So I will say if we can actually have two cards that you actually use, one or two cards. I personally have two. I love rewards and traveling mileage, so I pick my battles, but it's basically on your needs. You can have the cards. I will just say, do not keep them open if they're not really valuable towards your length and the type of credit that you actually have with them. Is that something that, will you help me with anything else, Matt, that you can add to that part?
Yeah, that's a very, very good point. So, if you kind of have that balance, you definitely don't want 10 credit cards or 6 or 7 credit cards. I think, 2 is a good number, potentially 3, but I kind of like 2 in the sense of fraud is very prevalent, right? So if you have fraud on one card, it may take some time for them to reissue a new card, and you don't want to be without that access to capital, so you have a backup. Another point, I'll get more on fraud later because I want to stay on this topic, but one of the things I like to do having 2 credit cards is one that I use for my recurring payments, my Texas toll tag, my utilities, other types of recurring service payments. And then I use another card for out and about gas stations, restaurants, and groceries, because the fraud doesn't usually happen with toll tag or CoServe or Verizon or what have you. It usually happens when you're scanning out and about. So I don't know about y'all, but I get very frustrated when I have fraud, not just because my, financial capital is at risk, because then I need to go call all of my different vendors to switch my auto drafts. So I like to have one card that's for auto draft that I'm not using out and about, because that limits the fraud that you're going to get. You would rather have fraud happen on a card that you can just cancel and not have to worry about, oh no, I need to call 10, 15, 20 providers to give that new card information. So that's just kind of a fraud tip that I like if you have 2 cards. I'm not saying get 2 cards just for this purpose, but I just got really frustrated of having to call everybody and give them new card numbers. So I've tried to separate and isolate where is the risk. The risk is when you're out and about with people installing skimmers or taking your card information. So I just try to find a way to limit that risk by only using a card for out and about versus manual payments, automated payments.
Perfect. Thank you, Matt. And we have another question, but it says, if I ask a credit increase on my card already owned, does that affect my score? So this is actually, I'm going to share this with you because it depends. Some banks will automatically increase your line of credit. If you requested it, they probably will pull credit because you normally have an offer. I particularly have called my bank and said, hey, do I have, if I have an increase, and they're like, oh, let me take a look. Sometimes you have offers. So they will let you know if they need to pull your credit. So that's basically, it's based on the bank and the financial institution, and they will be able to let you know if that's the case. And so is there any other thing that you wanted to add, Matt?
Yeah. So she is right. If, and it doesn't happen all the time. I think it's happened to me maybe 2 or 3 times in the 13 years I've had this credit card. So sometimes the bank will say, hey, you've been paying as agreed. You're a good customer and borrower. We're going to automatically increase your limit. That does not hurt you. It only helps you because your percent borrowed is naturally going to go down because what you borrowed stays the same, but your limit has gone up. So the percentage is better. But if you do truly want or need the additional access to capital, it's certainly worth calling them, and it would be a short-term hit. But again, eventually, with that limit going up, if you're using that same amount, the percentage utilized will go down because you have a higher amount. So eventually that might work itself out to the favorable, despite it being a short-term decrease to your credit. So I know a long-winded answer. So to answer your question directly, yes, it will impact the score as a hard hit because you're applying for the additional credit. But properly utilizing that card will get it back up to where it needs to go. So there is a balance. Sometimes they do it automatically for you. If you don't want to wait for them to do it automatically, if you need the access to capital, it will be a short-term hit that will be rectified with proper utilization.
Perfect. Thank you so much. And I will move forward. So I really appreciate the participation of you ladies.
Yeah,
on
love the
this part.
questions. Keep them coming.
Yes. So let me move to the next one. And I want to make sure that you guys know, if you've never seen a credit report, it's a very, I call it 1980s credit sample, but you're able to see a little bit of what you see. It's what you will basically observe on your own credit report. You will see your name, year of birth, your address information. So when you actually apply for a job, many companies actually pull your credit and they wanted to confirm and validate that you're actually the person who you're saying you are. Basically, again, is your resume in your information, but this is your credit resume. So it tells you about what you do, especially like if we're in the finance industry, we actually have to show this. This is super important because we're managing funds for our clients. So showing our habits of how we pay and be able to advise clients, it's one of the most important part in the financial industry. So one of the things that you will find as well, and you can see we have public records. So if you happen to have any information like child support or tax liens, bankruptcies, all this information will actually show on your public records. So that's information that will remain on your credit report, and you can actually dispute if there's something incorrect. That's why that annual credit report that I shared earlier, it's so important. Make sure that you check that out. It will tell you about your overall balances. Like if you have several cards, it will show you as well the different companies that you actually have. And if you have been late, it will show you the last history. If you can see here, it reflects the amount of times that you have been paying on time. If you have been late, it will show the word 30, 60, or 90, reflecting that you have been late for that time. If it goes higher, I mean, it can go 180, I guess. I really haven't seen that, but it could happen that you can see all the months that it's been late. So it will never see like 10 days. No, it will show 30, 60, 90, and so on, because it basically reflects what we talk about, the due date payment, the statement cycle. If you miss the due date, that doesn't necessarily mean that they're going to report you. Okay. You basically will be on the late fee. And then after that, it will be another cycle. By that second due date, that payment must be made. Otherwise, you're going to go into that 30-day late. So those are kind of like the urban legends that we always have. Like, what do we do if we're late 5 days? You will have a fee. And I will tell you, that's the wonderful thing ever. When I was pregnant, I actually didn't have anything and auto pay. And I realized that I was like, oh, I can pay this. Wrong. Don't trust sometimes the mind that you can do everything. That's one of the problems sometimes with women. We are like, we can do everything. No, I couldn't figure out and I delete the auto pays because I was at home. Wrong. I miss a payment and I have to pay a fee. So I have to call and beg them to please delete the $25 fee because I missed a day. At midnight on the day that your due date occurs, you will happen to get a fee on a credit card. However, vehicles, they have a grace period of about 10 days. Mortgages have a 15-day grace period. So even though your due date is on the 1st, you can really pay it until the 16th without really having any additional payments extra. Can you share, Matt, anything like that on commercial? Do you have any kind of grace periods?
Yeah, so certainly there are grace periods and that's why where we talk about it's we are not just numbers on a paper. We are people. We have stories. We have different things that are impacting us, whether they be medical or family or other types of emergencies. So that's why I think it's really important to have good relationships with your financial institutions and your partners. So not only does that history and that relationship that we talk about matter when it comes to your credit score, but it also matters for some of those subjective factors there. And then we've got a question: if you pay within the grace period, will you have a ding on your credit?
No. It doesn't even reflect. And that's the beauty of the credit part. Like really for you to be affected by that and really report that information means that you actually have missed your grace period, your full cycle. So very important that you communicate with your financial institution. I will tell you, when COVID happens, I was in the lending world. there was actually grace periods for months. I mean, people were just in deferment. So, and those are no reporting on the credit report. It's just basically, okay, we'll make sure that we work with you. There is clients that they actually have situations when their family, they lost their income. So make sure that you reach out to your financial institution when you have a financial hardship, that something happens. Just don't assume, contact people. We are so blessed and fortunate to be able to communicate. Talk to them. If you can't talk, make sure that somebody calls on behalf of you. Have that relationship with your financial institution in order to prevent any future problems when it comes to that. Avoidance is something that we normally do. And I told my clients, please, when you have a medical bill, make sure that you reach out to the medical bill department and try to make an agreement. Those are things that we go into credit report, it goes to collections, and we don't even know because we just said, it's okay, I'll figure it out.
I'd like to pause on this one. When you talked about medical, some of my best customers, when they've been applying for a loan and we look at their credit score and it's not where they think it should be or would like it to be, is because of a very small medical bill. I'm talking $100 to $500, and they had no idea that it was due, yet it was negatively impacting their score. Which goes back to that first point of every year you should be looking at your credit report, because there could be something that's negatively impacting you that you have no idea on, that you have the financial capacity to repay, but you just didn't know is negatively impacting you. So I think one of the most important things that I stress to my clients and those in the community that I talk to is, access to information is so valuable. Not just for knowing your credit score, but with fraud. I'm pretty OCD, so I check my phone every day for what my balances are and what my credit card statement says. Not because I'm worried about where it is. It's just from a fraud perspective. I want to see if something has been, because there's more that you can do with early information to fraud or to these medical records, because if a fraud has happened, you have a certain window that you can dispute that, and it's easier to get your money back the quicker you report it. And then same thing with the credit impacts. If there's something that's impacting you that you don't know about, the longer that goes on, the more it's going to show as a negative for a period of time, as opposed to finding it and fixing it.
Matt, I love what you shared. Thank you for doing that. So one of the things that I wanted to address, and I know it's not part of these classes specifically, is we have a 60-day term to really file that claim. It's what basically regulations allow you to do. However, of course, the bank can do an exception and try to see if it can help. But in reality is, as consumers, we are protected for 60 days on electronic transactions. So if you have not checked that your transactions are going through and you're like, oh, they've been charging me for all this time, it's so hard to really claim the money back after that. I just want to make sure I kind of give you an idea, because that is something that timing is so important. Usually it's on the back of your statements in the very end, fine print, because it's really, but it's our money. So we need to keep on track of this. Nobody else will check for us, right? So I'm going to make sure that I can share with you a little bit about,
one more, and then we'll keep going, and I'll answer this one quickly. How do you correct any wrong items on your credit report? I would say the best way to do that, when you look at the credit report, it'll say who the institution is, right? Whether it's, a financial institution or whether it's a healthcare institution. And then what you do is you see that, and then you call them directly, whether it be the hospital or the medical provider or potentially the collection agency, and then you rectify it from them. And then, but Maria, is there anything you have to add on that as far as disputes?
Yes, actually, that was very helpful. And one of the things is that nowadays, majority of your providers, so Equifax, TransUnion, and Experian, allows you to actually log into their free site, and you can actually dispute the transaction directly on them. So that's something that nowadays, due to the high activity on credit fraud existing, you actually can do the dispute online. You can call actually as well, and they will be able to help you. So that's actually a service that majority of the credit bureaus are providing right now to the overall community, and there is no cost. However, you definitely have to follow through. They're not going to be like, hey, we just update this. So it's so important that, again, our money, our credit, we need to seek ourselves for that cleanup and success, right? We're in charge of making it better. We're in charge to ruin it. We're in charge to correct it. So definitely that's kind of like the great improvement that has happened for the last several years. Do we have another question on the chat or?
Nope, I think that was it.
Awesome. Thank you so much. So one of the things that I wanted to kind of recap on this. So on your credit report, you will see the personal profile, which is information that can be used to identify you, make sure that everything is correct. We have several people that are like, I am just Maria Griffiths, but we might have Maria, like Mark Griffiths, the first, the second, the third, junior, and we have information that sometimes combines. So keep an eye on those things, because that's actually when we have the famous identity theft. That's a whole different level of information, but I want to make sure that you keep an eye on the credit report. Check that your name, your social, your address, all that information, your date of birth, it's correct. Credit summary is the list of total numbers of the open and closed accounts that we have on it. Sometimes some bureaus don't report. Earlier, Matt was showing about the credit card that he had when he was in college, and then when he became actually working for the bank, he wanted to have one. Sometimes some of the companies don't report that account has even been closed or open. So you definitely want to keep an eye on all these items. Public records, we talk about bankruptcies, tax liens, and judgments. So if there is something that is incorrect, make sure that you dispute it. On those cases, you can actually, just to give you an idea, I had a client back in the day that he had a child support tax lien, had a lien on it. So he had to basically go to a child support. The child was already 25. And so he needed to just get it corrected. It was a matter of correction. So, and he got clean. But in the eyes of the bank, the state put a tax lien on his assets. We couldn't let him into his safety deposit box because of that child support thing. So make sure that you check those that information. When we talk about credit inquiries, it's the information that you actually get all these pools. If you see something that you don't recognize, oh gosh, I see that XYZ bank pulled my credit. Well, I didn't apply for anything. Why am I there? You can present a dispute. Maybe somebody's trying to log into your accounts. Maybe yours, neighbor, spouse, children, who knows? Anybody can actually access and try to apply for credit on your behalf online. There is no physical access, no signatures. Nowadays, everything can be done online. So I want to make sure that you keep an eye on that part. And the last factor is actually going to be, let me go back. I'm so sorry. Let me see. There you go. I click on the wrong button. It's basically your account history. So the most detailed section that contains the bulk of your credit information, we just talked about earlier, how many days, the 30, 60, 90, the loan amounts and the payment history. So keep an eye on all these factors when you review your credit report, and make sure that you do review this in an annual basis at least just do it maybe with your checkup with your doctor. I'm going to do my annual checkup report. Again, your bank may be able to provide these services as your credit reporting on a monthly basis. I love to get my alerts from Truist telling me, hey, there was an inquiry, nothing happens. I actually get an email that says nothing happens. I'm like, yay. And so it's really good to have that feeling that everything is being controlled and good. Ways to establish and reestablish credit. It's basically very basic information. So to establish credit, you can apply for a loan, open a credit card, open an account with cosigner if necessary. Another thing that I wanted to share with you, I have a 20-year-old that I add him into my credit cards when he was 13. I put him on one of my cards as an authorized signer. When he reached 18, he has probably better credit than me, just like Matt shared earlier, because he had not really debts. And he showed these great credit cards with great history. So the kid was stoked. He's like, Mom, I want to go buy a Tesla. I'm like, no, that's not happening. You can't afford a Tesla. You don't have an income. So know that establishing credit can actually be impactful for some of your children. You can actually co-sign something for them, or you can definitely put them as an authorized user on a card that has been open for a long time, and that will boost their credit. I'm from Ecuador, born and raised in South America. I married a wonderful man here in the United States, and he had credit. Even though we're the same age, he had credit established. So when we got married, he added me to his college credit card, and suddenly my credit got boosted automatically because his good history just get passed to me. It was like generically connected. So if you're going to have that opportunity that somebody's going to give you that booster, make sure that you have a good sponsor. Don't let yourself be a joint or co-signer on a credit card that is not actually going to improve your credit. That's one of the big taboos out there. If somebody puts you into a card that is already being very damaged because of wrong payments, late payments, it's not going to help you. Matt, do you have anything to add on this?
Yeah, Allison, appreciate the question here in the chat. Does a spouse's credit reflect the partner? So the answer to the question is yes, if they are joint on the credit, whether it be an account, a mortgage, a credit card, a car loan, and that is good or bad. So if my spouse has a separate credit card for me that she had before we met, any activity on that card is going to have no bearing on my credit score. However, as a family, we have a joint family credit card. Regardless of who swipes it or who hits the payment button, it will affect you both correspondingly. So only if you're joint on the credit.
So I'm going to ask something out loud now because I don't know how to write it.
Yes,
What
ma'am.
if you're applying for a home or a car and one partner has good credit and the other one has bad credit? How does that work?
Yeah, they will balance that. So, they will look at both factors. Generally, I mean, so it will help for the one that has the positive and quote unquote hurt for the one that has the negative. But that could be something that you balance. For instance, my wife and I got an auto loan, and we both have good credit. So, and we didn't plan on missing any payments. So we decided to, for my car loan, just apply under my name. And then for her car loan, just apply under her name. Because when I applied, it took the hit. But then once I started paying, it went down. And then on her side as well. So on a big thing like a house, you mainly need both incomes, right? So it's not just the credit score, it's the income that's going to go into that as well. So even if one partner maybe doesn't have as good of a credit score, that's one factor they look at. But if you say, well, I don't want them on there because they don't have as good of a credit score, well, then you can't count their income, which is going to be another factor to that lending process. So you kind of just have, so for things that are, and I hate to say small because cars are so dang expensive now, there is no small ticket car that you can get. But for smaller ticket items, if you're doing something, you may say, hey, well, let's not impact yours. Let's just put myself on there. But something to the scale of a house, generally, you might need both spouses' income, despite if one has a better credit score or another.
Yeah, and thank you, Matt, for sharing that. Miss Allison, so before I was doing this role, I was actually doing the lending world for homeowners. And unfortunately, yes. So if one of the spouses don't qualify, there is no average. Majority of the type of lending when it comes to houses, it will be looked individually and they both have to qualify. Now, there are definitely programs that are more accessible to others, right? But the qualifications of a mortgage owner, it will be that both qualified. There is some cases where you actually, even on an FHA role, and we're not going to go in depth on this, but like if you're buying anything to the Federal Housing Administration, they will actually say, okay, even if you're not putting the spouse, we're still going to take a look on her debts. So there's a lot of factors on it. So definitely having both partners on the household to work towards their credit and then kind of make the decision, okay, are we going to do this? The impact that we do, how is our debt to income, right? That's why we started the class talking about how is our income, how is our budget, because credit without that major source of how are we going to pay it, it doesn't work. We need to work on that cash flow, on our income. As I shared earlier, my son, 20 years old, he wanted to buy a Tesla. I'm like, your income doesn't allow you to. You may qualify, but that doesn't mean that you can pay it. So credit with no support, we're just getting hit. The next part is to rebuild credit. Basically, get a copy of your credit report and fix any issues that you see on it. Apply for a loan or a credit card with a co-signer. Open a checking and savings account. I have clients that they have filed bankruptcy in the past and they can get a credit. They can get credit even if they want to go with a great co-signer, because they might not be able to get that type of loan. However, they can be added as basically as an authorized signer and start reflecting some payments, just like I shared with my 13-year-old when he was a child, right? Open a secure loan or a credit card. We talked about that earlier. So secure cards, secure credit cards, will start rebuilding that credit. Now, one of the things that I wanted to share too here, and I'm gonna move my screen. I'm sorry, I went back. So let me go back. So it's to maintain your credit. Please don't use a repair company, credit repair company. We have so many people that call you and be like, hey, you should do this settlement and you're gonna be done. And we're gonna, in reality is the impact that you have on this might be extremely hurtful. And the consequences, we just want to get rid of the debt and be like, okay, I want to figure out, it's not going to be helpful in that case. If you want to maintain your credit, work directly with a credit company, make the payments. There is budgeting classes that we can definitely help you and Miss Brenda through different organizations that you can actually work, how you're going to pay more towards that debt. Miss or ignore payments, please do not. Make the minimum at least if you can, because that will allow you to do, of course, we're going to pay it faster, but if you want to maintain your credit, do not miss or ignore payments. And finally, what Matt said earlier, close existing credit cards. That is a hit on your credit. You're taking away history from it. So if you know that you have been a great credit, like a credit person, why taking away that history? So have a big evaluation of what you're using and how you're using the credit. Tips for using credit responsibly. We want to kind of talk about this, is ways to maintain your credit is in a smart and productive way. Keep track of your credit lines. We talked about earlier, if I have a $500 secure card that I opened in 2007, do I really need to keep it open? But it's just been there and I forgot about it. So keep track of that credit line. I checked my credit report and I was like, I don't remember that I opened this Macy's credit card. Well, make sure that if you don't have it, if you don't use it, it's still open, see if it's really valuable to have it. If you don't even go to that store, why do you even have it, right? Use a budget. We talked about this early, was the beginning of our class. Use a budget, a credit purposes. Without a budget and idea, we're getting out of control. And as the name of the class is, how credit helps in lending, it's really how you're able to manage credit, right? Because if you don't actually know how to manage credit, credit can actually be your worst enemy. So save for larger purchases instead of using credit if you can. And when I'm talking larger purchases, I'm not talking about your home, right? But if you're going to go on vacation, right? We said, I have a $2,500 coming up vacation. Well, let's plan ahead. Let's start working on that plan, because we made the idea that, oh, I got a $5,000 credit card. I'm going to charge it all in this vacation. And guess what? Other things might happen. So when the emergency hits, you already ate $2,500 out of that credit card that you haven't even gone on that vacation. So maybe having that reserve for those purchases is definitely a better advice that I can share with you. Matt, I think that we have a crazy chat going on. Is there questions?
Yeah, I like it. I will first, Jason, looks like we maybe either struck a chord there or you can agree and attest to what we're saying, because a lot of what they're doing is just settling with the credit card companies in the sense of, hey, you owe $1,000, we'll take $800. Oh, you think you're saving $200, but really that hurts your credit history because it shows that you didn't pay $200 worth of your outstanding debt. And you're thinking, wow, they're just doing me a favor. I don't owe this much. Well, no, it's negatively impacting the credit there. So it seems like they're knights in shining armor. And, you know, there may be scenarios where that works, but, you know, really try to see what you can do. Call the issuer directly, call your bank directly, your mortgage company directly, your car company directly. And if you really need help, see what can be done as far as payment deferrals or payment plans, as opposed to going to that third-party company. Another question we have, and I know we got 10 minutes left here, are what are some other types of secured loans, you know, outside of house and car? So, you know, whether that be you're getting a boat, you're getting a piece of equipment, you know, maybe furniture or things of that nature. But, you know, what I would stay away from, you know, anytime you buy something, everyone's like, hey, you want to apply for our Macy's TJ Maxx XYZ credit card and you'll save 10% today. Or, hey, you're buying this $10,000 piece of furniture, you know, do you want to finance it? I mean, those do count as hits. So those are, you know, not necessarily a Macy's credit card, but getting a piece of furniture or a boat or any kind of physical asset that's directly tied are ways, you know, other forms of those, but the traditional ones are, you know, cars and houses.
Any other questions in the chat? No more?
Really appreciate the open conversation, guys. This makes it way more fun for all of us.
Okay, so we got actually controlling your debt. So make a list of all your debts. That's super important. You know, like if you actually don't even remember that you pay those, the boat and the furniture and all the different things, make sure that you keep a track on that. Then rank them from the smallest to the largest. This is a very good thing that I want to make sure that everybody keeps track of this. So if you have the silly small credit card for $500 that is been haunting you for years because you just pay the minimum payment of $25 and never goes down, start tackling that baby right away. So go for the smallest and then move that to the minimum payment. So get ahead to making more than the minimum monthly payment on that one. Once you get out of debt, try not to get back on it. So the way that these controlling your debt works is that if you go by the smallest card and then you tackle that credit card, that minimum payment that you're been keeping on this one, you move it to the next one. If you may have that, if you may be that household that has 3, 4, 5 credit cards and several debts, start moving from the smallest to the big one. You don't want to go to Mount Everest to be your first time going hiking. You want to start with a little one and be like, ooh, I feel really good. I want to run a marathon, but I have to be honest, I'm starting with the 5K walking, right? I can't do my 26 miles yet. So I'm going to start with my 5K walking and then move on. And that's how you feel really empowered towards this. And this is when finance and money and credit, I'll tell you, it start feeling so exciting because you're managing that tool, that resources, you're actually feeling stronger. I always compare it with cooking. If you know how to make that recipe, you feel like, oh, I can take it. I can do it for Thanksgiving. I can do it any holiday. But if you never done it, you're like, oh my God, how am I going to start this? So same thing when it comes to managing money and funds and resources and credit, start getting very savvy about little things, and then you will build a skill on it. We talk about the controlling the debt. So if you have a credit card, $1,500, $2,500, $3,000, start with the smallest. In this example, start with a $1,500 credit card balance and then move on up to working the $2,500 credit card balance. Let's tackle that car loan at the end for $3,000 because it's the smallest one that it will make you feel really strong, and you use that payment towards, at the end, you end up keeping money like you were living the same way. And you're like, oh, now I'm saving, you know, $400 a month because I don't have the car payment, I don't have the credit card payment, and I don't have the car loan anymore. Increased financial security. These are benefits that we actually encourage on the financial wellness program at Truist. It's really the benefits of paying down your debt. Increased financial security, life enjoyment, reduce stress, improve credit score, own assets, right? And definitely giving back to our community. I always add that as a little extra tip, right? When we actually feel really empowered and we're being able to tackle all these parts, at that moment, you're able to give back. And there's nothing better than return all the great things that we received by managing these correctly. I want to share these resources and help. So if you actually have your amazing cell phone, you can actually QR code, you can take a picture of this awesome QR code. Truist has a phenomenal program called Money and Mindset that allows you to get access to articles, calculators, and tools. It's a totally free complimentary service to all our members of the Jewish Family Services of Greater Dallas. And you can actually take a personality quiz that tells you a little bit about how spender you are. It actually allows you to sign up for our newsletter when it comes to the money and mindset, and a podcast that allows you to get a little bit happier about money. So keep an eye on that. If you want to, you can take a look on that that QR code and have it available. I know we have some questions in the chat, but we're actually going to go to the Q&A. I'm going to share.
I'll start with one. Just kind of take home that I think is really important and impactful to you all. I mentioned I was debt averse, so I used to always use my debit card because I didn't like, just thinking that I had debt out there. But the benefits to using your credit card versus your debit card. Number one, you should only use the credit card for the items that you're going to be able to pay back during that payment cycle, right? Especially if you have $1,000 credit card and you use $1,000, but you pay it off before your cycle's over, you pay 0 interest. So it's free financing if you use the card properly, where you borrow and pay it back right away. But also you're getting the, theft protection. If you were to use your debit card and fraud happens, they're stealing your money out of your checking account versus your financial institution's money from your credit card. And there's actually better and easier protections to get your money back with fraud on a credit card versus fraud on a debit card. So number one, you build your credit report using your credit card versus your debit card. Two, better fraud protection. Number three, a lot of times you're going to get points. You'll get $1 or $2 for every 100 that you spend on a credit card versus nothing on a debit card. So we call that kind of like a three-legged stool of the credit card benefits. And the other thing I'd recommend, if you are not applying for credit anytime soon, if you're not going to get a new credit card, if you're not going to get a house, if you're not going to get a car, the best thing that you can do to protect yourself from fraud is lock your 3 credit reports: TransUnion, Equifax, Experian. If you just Google freeze credit report, Experian, freeze credit report, Equifax, and TransUnion, it's a very simple process. You're going to have like a username and a PIN that you can freeze your credit report. That way, if any fraudster is trying to get a car loan, a house loan, or open a credit card or a bank account in your name, in theory, they will not be able to, because anytime one of those transactions happen, they pull your credit report. So if your credit report is locked, no one is going to be, including yourself, is going to be able to go apply for credit. So there's a story where the LifeLock owner drove around Manhattan with his social security number, a name, and information on a car billboard and said, use LifeLock, no one's going to hack my account. And he got hacked like instantly by 20 different people. So these LifeLocked and secured types of systems, they're just not as secure as, number one, monitoring your activity to identifying the fraud so you can act quicker to solve it. And number two, locking your credit report with these different agencies. And then when you need to apply for a loan, you can temporarily unfreeze it for 1 to 2 weeks, and then it'll lock back up automatically. So that's just unrelated to credit scores, but very important because fraud could impact your credit score. So I would highly recommend that if you guys are not looking to get a house, get a car, open a new account, go on to each of those credit reporting agencies and lock your credit, freeze your credit.
Brenda, I'm going to share actually, I know that we have the chat with questions. So what I will do is I'm going to share my contact information in case they have more questions. So feel free to connect with me. These are questions that were brought up prior that I want to make sure we address, because I know that we have like a couple minutes and I don't want to get over. So these are questions that we talked, and it was is credit score the only qualifying factor to get approved for the loan? Earlier, Matt shared that there is so many different factors, and we talk about there is the length of the history of the credit, right? And then we're talking about the relationship. Sometimes your employment, if you have not been employed long enough, they question that. As I was sharing earlier, my son is 20 years old. He might have an amazing credit score, but he doesn't have any income. So there is a lot of different factors that come in place. I was recently in lending, and I tell you, we take in consideration so many factors. Your cash flow, how do you manage things? Your bank account might show and reflect your spending habits. So all these things takes place when it comes to qualifying yourself for a loan. Every bank has different criteria, and I will definitely suggest you to keep yourself engaged with your bank at all times to make sure that you exactly know how the operational part works in that case, and they can actually guide you and advise you. How does my overall credit report influence my interest rate? There's different factors on this, and on the lending side, it definitely impacted you. If you have a very low credit score, it's showing that your risk is higher. So in that moment, you're facing yourself a potential higher rate. That doesn't mean that it's always going to impact. There is actually regulators that tell you this is the maximum you can have. It's not like if I have a 300 credit score, I'm going to be able to get a loan for 50%. But unfortunately, that's kind of like what happened. We are seeing those commercials where they tell you, you borrow $500 and you pay $1,000 on it by the end of the length of the time, because you are paying that high interest rate overall because your credit score, it's not qualifying you for the best available market part.
I think that ties, and unfortunately I do have to head out for a 1 o'clock, but I think that ties to one of the questions that we have of how do you discuss, with your lender getting a lower rate or lower payment. Unfortunately, rates are rising right now. So if you did have a car loan or a home loan that you got several years ago, you're not going to be advantageous of a situation to get lower rates. But as far as, credit cards, or maybe on the front end, I would just be, kind of transparent with them that, you do have the ability to shop and see what is the best rate that you can get, or whether it's a home loan, usually that 20% down is what allows you to avoid PMI but there are other products that can certainly allow you to get lower rates. So I think a lot of those things are easier to be done on the front end versus the back end, especially because we're in a rising rate market right now. But certainly, worthwhile to have those conversations with your financial partners. So again, I'm sorry that I do have to jump off. This is the most fun I've had all day. And again, really appreciate everybody
Thank you,
being
Matt.
active and asking questions.
Thank you so much, Matt, for joining.
You're in great
information was
hands,
very
obviously, still with
valuable.
Maria. So keep the
Thank you,
questions
Matt.
coming.
We'll see you later. Just very quick on these questions that we have. Is it easier to get a car loan than an unsecured car personal loan? Yes. Car loans right now, if you go to a dealer or any kind of dealers, you can definitely get a car loan. When it comes to the bank, the standards of the bank are recently a little bit higher because the impact that you will have at the bank level when you apply for the car loan is just one lender, versus if you go to a car dealer, you get a lender throw out to the world. It's like a baseball that go and hit different lenders, and they will try to capture whoever can give you the loan. So you may get a loan for like a 20% interest rate, but you will be able to qualify for that car loan at a dealer. When it comes to the personal loans, the personal loan is unsecured, so you may use that cash and go and spend it and not repay it. So it's definitely a little bit harder when it comes to that unsecured loan. The card can be repossessed by the lender. On the cash, it can't. So if my card is paid off, can I refinance the loan, borrow against the equity? Yes, you can, depending on the lender. You may be able to do it. At Truist, we're able to do something like that. Not every lender is available to do that, but you can borrow against the equity, and it's basically a refinance, just like a home. Can I pay off high interest credit card balances with a debt consolidation loan? That will be the perfect scenario. However, your credit score has to be able to validate, and your debt to income ratio to accountability for that. So you definitely need to sit down with a banker and look at your expenses and make sure that you're able to repay that, because in the eyes of the bank, you can all go back to the old credit card and build those credit cards high again. And basically with that loan, you're having a double dip, and instead of helping you, they're hurting you. How can I prepare to apply for a mortgage loan? Definitely cash flow. And having that cash flow available will be the way to get these process in place. If you actually are showing too much debt to income ratio, if you actually, your credit is not looking very attractive, start working. I would say if you're planning to buy a home and you're working on your credit and your income, make sure that you have at least 6 months to a year in advance. We don't get up in the morning. When I was a lender, I used to say, you don't get up in the morning and say, I'm getting married today. We said, I want to buy a home today. So you take about a year, 6 months on preparation. It's like a baby, it's a milestone. You need to take the time to decide, I want to buy a home, and you prepare and connect with a home lending advisor in this case. I wanted to share super quick. I know that we are, oh, where am I? I lost it. I wanted to share this super quick because I know it's my last screen, and I wanted to share this with you guys because you attend today. Truist has this amazing option for any of you. If you decide to talk to any of our bankers, it's called our financial wellness program, and basically it's a benefit to all our community. Because you attend to a seminar today, you have a relationship exclusively with Truist that you can join, and you just have to say, I attend the seminar at Jewish Family Services of Greater Dallas, and our bankers will able to look it up for you. There is a code that you can refer to, and definitely you have exclusive benefits. I actually, is there any other things that we can address right now, Ms. Brenda? I'm running a little bit of time and we're over.
Thank you so much. No, you're totally fine. I think everyone got so much valuable information today, and you have really captured and answered all of the questions that we asked you to present. So thank you so much. And I will definitely give out your information further if any of our attendees would like it. So
yes,
thank you again. And for Matt and for everyone attending. Thank you so much, everyone. Have a great day. And we're here to assist. So let us know how we can.
Thank you so much. Thank you for the partnership. I appreciate it. Have a wonderful day, everyone.
Thank you. Bye, everyone.
Bye,
Take
everybody.
care. Thank you. Bye.
Bye.